Hey Nancy, this is our Accounting 202 project. I'm John McFarlane,
And I'm Bryan Kail.
and this is our newly recycled pet products marketing dashboard.
Dashboards can transform raw, meaningless data into useful, actionable information. A dashboard allows you to look at charts and graphs instead of reports and spreadsheets, and it can pull together data from areas as diverse as e-commerce sales and human resources. The main reason for a dashboard is to get all your vital information components into one location. A standard dashboard contains various graphs, pie charts, line graphs, and lists containing information from yearly sales, manufacturing overhead, monthly sales, and sustainability. The main reason a dashboard is so popular with companies worldwide is because of its easy and quick access to information that businesses may need in dire situations. And without such information, companies may not make the best all-around business decisions. A dashboard can give companies real-time graphical presentation of where the company stands. Companies can do statistical analysis and trend analysis right from their desktop, which is very convenient. Monthly sales. Our monthly sales show that the company experienced the most growth in the months leading up to Christmas, hitting its peak in October with 400 units, and in November with 440 units. We believe this is due to the seasonal spending and the fact that the weather during those months is at the coldest of the year, meaning more people will want to shelter their dogs. In our monthly sales graph, the company's sales is represented in dark blue, and the company's profit is represented in light blue. It is important to be informed about your company's monthly sales because it gives the company a good base on how many units to produce in order to receive the highest rate of return. Yearly sales. The first part of our dashboard that I would like to talk about is yearly sales. Yearly sales is an important part of our company dashboard because it gives your company up-to-date information on how your company has produced and will be producing in previous, current, and future years. In our example, NR Pet Products experienced a 5% increase in 2012, a 7.5% increase in 2013, and a 10% increase in 2014. Our projected yearly sales are steadily increasing because we feel that due to the increase in the student population, there will be greater amounts of trash readily accessible for newly recycled pet products to collect, recycle, and produce at larger volume of products. Overhead expense. Overhead expenses are those production and non-production costs that are not readily traceable to specific jobs or processes. Overhead expenses encompass three general areas: indirect materials, indirect labor, and all other miscellaneous production expenses, such as taxes, insurance, depreciation, supplies, utilities, and repairs. Therefore, overhead expense is part of the total cost of maintaining and staffing a business. In our expenses graph, our monthly overhead expenses are represented in blue, and our yearly overhead expenses are shown in red. This graph shows how much money NR Pet Products allocates for all types of expenses on a monthly and yearly basis. Sustainability. Sustainability and business are not always seen as a good working pair. Businesses often struggle to implement sustainability measures as they think that it is taking money from shareholders. However, as more pressure builds from the public, businesses are being forced to look again at combining sustainability and good business practices. Sustainability will involve considering the long-term consequences of industry and manufacture. Economic sustainability involves developing long-lasting systems of trade, while ensuring that these systems have a lesser impact on the environment than the previous methods. Corporate sustainability, meanwhile, focuses upon the environmental and social impact of business actions. Investors may also look at the life cycle analysis of a business. This examines the long-term environmental and carbon footprint of a product. Investors can decide not to invest in a company if its footprint is too large, or if they want to invest, it'll be healthy because it's too small. Companies with proven records in global and local sustainability can make profit through employee productivity, a better term of public following, and investments due to good public reputations. As you can see, our sustainability meter shows that NR Pet Products has a carbon footprint at 68%, and our product purchasing is at 100% sustainable. However, as seen in our slide, we can use some improvement in the factory and warehouse section. Other than that, our carbon footprint is very clean. That concludes our presentation. Thank you for your time.